In today's update, I'm just going to go over the timing setup that I was sharing in the NASDAQ and some details and how you can use it if you're allowed to look at counter trend setups. And one of the things that you can also do is, if you are on my site, one of the things that you do want to look at is the member webinar area, because there was a webinar that I did, let's see, in February, early February, specifically on counter trend setups, okay? Because I didn't even put the counter trend setups in my book, because I just didn't want to put it out there for newbies, because pretty much everyone knows that trend setups are typically better. But the way that I do the counter trend setups is explained inside of this video. There have to be specific things, including timing factors, before I would look at a counter trend decision. So let's go back and take a look at the the chart in the NASDAQ. This is actually the NASDAQ cash daily chart, and here's where we had the timing factors, where I showed you the histogram a couple days ago, March 21st, 23rd. This is what it looked like here on the chart. This was the first time window. The next one wasn't really coming in until the end of this month, but we did end up putting in the high on March 21st, and we did start seeing some sell signals. Now, I told you that at a minimum I wanted people to ratchet up stops, because for a couple of reasons. We had the time resistance to the rally. We didn't know if it would kick in or not, but I'd rather be safe than sorry, along with the fact that this move from this prior high to low swing was extended. Not only did we reach a 1272 extension, we also reached a 1618 extension, and then we would have had a third target that came in a little bit above the market. But when you at least reach the 1272, you always want to be very careful, because many moves tend to terminate at extensions of prior swings. Okay, and this one was pretty well extended. The S&P was a little bit different. On the S&P, what was kind of interesting about this one was that this high to this low, we met the minimum target, which was that 2852 area, and the second target would have been 2887, which we did not meet. But there was resistance that came from one other place that I will sometimes look, and that will be with symmetry the other way, because this rally swing was 139.75, and this rally swing into the high that was made Thursday was 139.5. So this was also considered, an area of resistance, besides the fact that we were extending that swing. So there are things that we know versus things that we don't know at this point. So what we knew, or still know, is that there was time and price at this last high, and if you were allowed to take counter trend shorts, that you could have gotten short and defined your risk right above this recent high. What we don't know is how much we're going to get on the downside. So one of the first things that I do is take it from one decision to the next. And the first thing will really be to look at the prior declines within this uptrend since the December lows were made, and see if we start to find some support above this general area. Okay, and that comes in, well, actually the low end of this is 72.40. But also know that if we don't hold that support, that we could get at least a deeper downside correction. Again, we don't know if we're just going to have a symmetrical pullback and a resumption of the rally, or if it's going to continue through this support and maybe give us an even deeper pullback to this low that was made late December. So let me just give you an idea of what a trigger looks like. Again, triggers are essentially the price action that tells you that it's worth placing a bet. And like I said, I did not put this out for newbies, because if you're not nimble, you can get your butt kicked with counter trend trades. But was there a sell signal, for example, against the time and price decision? Yeah, we had some of the price resistance in here. We had the moving average crossover to the downside, and then also you want to look to the left and make sure that it also took out a prior swing low, suggesting a pattern shift from higher highs and higher lows to, you know, lower lows and lower highs. The only problem is, in this case, that this essentially happened in the overnight market. So it looks like the signal hit in the overnight market, and once the market opened, you know, there was a chance to, you know, maybe look at a pullback for a possible short. But bottom line, we knew that this was triggered into at least a short-term short mode because of the time and price and the trigger that actually occurred overnight. So that kind of stinks when it happens like that, but you know, it is what it is. Anyway, market is still vulnerable to the downside, but I'm going to take it to the next decisions and see if we start to base or not, and then we'll just go from there. We'll be setting up new trades in the room.